second webinar that we're organizing concerning concerning e-commerce, but this time we're going to focus more on the legal and tax related issues when it comes to exporting your products to the US. As hopefully all of you are aware, this will be a Q&A webinar, which means that all of you were able to submit questions beforehand, and we will go over each and every one of those questions with you today. A couple of do's and don'ts. Please mute your microphone, of course. Make sure you switch off your camera. You can post any additional questions that you have on top of the questions that you have already submitted in the chat, and we will either go over them during the webinar or at the end. And a copy of this presentation will be sent to you, also a video. Maybe interesting to introduce myself. My name is Karine Rayet. I am Trade Deputy at Flanders Investment and Trade in New York. So if you were to have any general questions about the webinar today, feel free to email me at newyork@fitagency.com. But I'm not going to do this alone. I invited two speakers focused on legal and tax today, Nathaniel Lusik and Ben Droch. Nathaniel is partner at Hodge & Russ. Nathaniel, maybe you can introduce yourself a little bit to all of our participants today.
Thank you. Yeah, pleased to be here today. I am a U.S. attorney based in New York. I frequently work with European companies coming over into the U.S., either setting up the U.S. entity or with contracts or intellectual property issues. And although my trips to Belgium were canceled this year, it's always a pleasure to be able to collaborate with Flanders Investment and Trade on these sorts of webinars.
Okay, perfect. Next up, of course, Ben Droch. He will focus more on the tax side. He's client manager Benelux at International Management Solutions. Ben, maybe also for you a minute to introduce yourself.
Yes, thanks for having me. So I work at International Management Solutions, or IMS in short, and we only focus on European companies that are setting up in the US or already active in the US, with everything that comes to administration, tax, and day-to-day business in general. So I lived in Chicago for a few years, but I actually returned back to Belgium in March this year, and so we set up an office in the Brussels region, where I am the first contact for all our clients that are coming from the Benelux.
Okay, thank you. Well, without spending too much more time, let's dive into the questions. First up are the more related to setting up in the US. There came a couple of questions in, and I've grouped them together on this slide. So one question was, is there a need or an advantage to set up a US entity? Do we need to set up a US-based entity in order to sell online? And if not, would you still recommend it? And finally, should we open a US account if we're doing sales in the United States? Maybe Nathaniel, you can start off for this question.
Sure. So in general, I mean, there is no requirement to set up in the US, but it does have a number of advantages. As Ben will mention, setting up a US entity helps you manage your US taxes and your global tax structure. I'll leave that to Ben. But there are other advantages for setting up in the US. It can help with marketing, either in the US to have a local office, or with your contracts to have the other party being able to interact directly with the US entity that has a US bank account. That can be an advantage. Having a US entity also can help if you're planning on doing fundraising or trying to seek investment. A US investor is usually more inclined to invest in a US entity than in a European entity. But the other main legal advantage is that it can help you with liability. So the United States has a reputation as somewhere where the courts and judges are very, very busy. That is true. Having a US entity can serve as a shield to protect your European parent company, or sort of the core business or your founders or your owners over in Europe. You can use the US entity to be the shield that if there is a lawsuit in the US, the lawsuit would be against the US company, and then hopefully you've compartmentalized it so that it protects all the other assets on the other side of the Atlantic. Regarding the final point of should you open a U.S. office? I mean, we'll get a little bit into the mechanics of that later. There's no, even if you form a U.S. entity, there's no requirement to have the U.S. office. All that's required in the U.S. is a post office box and someone who is checking your mail. That person's called a registered agent. That's a service that's only a few $100s per year. And so the advantage of having the liability protection, being able to open a U.S. bank account, getting a U.S. insurance policy, without having to have a U.S. employee or a U.S. office, it may make sense for what you're trying to do.
Mm-hmm.
Yeah, and maybe to add to that, I fully agree with Nathaniel. Do you need an entity? That's maybe a bit too strong. Is it recommended in certain situations? Yes. Why is it not? There's no substantial differences in the taxation of a US entity or a foreign entity. But if you have tax obligations and tax exposure, the foreign owners, they usually don't like it that it's the foreign owner that has to file tax returns in the US. So that might be a reason when there's tax obligations to set up a US entity. So that's why we usually see when you are planning to hire US employees, if you have stock in the US, if you have a US office, those might all be reasons why you want to set up a US entity.
Mm-hmm. Okay. And then maybe following that with the next questions, now that we know that it's not necessary or mandatory, but there are some advantages linked, are there some places in the US that you would recommend when setting up, like in terms of lowest taxes, quickest setup, lowest long-term, and revolving cost?
Yeah, maybe Nathaniel, you can start and I can pick in on that on the tax implications.
Sure. So the answer is that we usually form entities in Delaware, and I'll let you know the exception to that at the end. But Delaware is a small state between New York City and Washington, D.C. There's really nothing there. You're not going to form an office there. You're not going to have an employee there. You're just going to have a post office box. Delaware is still the most popular place to do it, and that's because it has the most developed commercial and corporate rules in the United States. They're actually a model for most of the other states in the U.S. It has one of the best commercial court systems in the United States. If you form the company, you have to share very little information publicly, which can be an advantage. There's very few public records in Delaware. You don't, for example, you don't necessarily have to say who the officers are, which is not true in some other states. If Ben will talk about the corporate tax structure, but you may not have to pay corporate tax in Delaware if you don't have any activities there. You don't need U.S. citizens or U.S. employees to form in Delaware, and it's very, very easy to form. We can form a Delaware company in 48 hours or less. Now, I want to mention one small detail with that, and that is, yes, you can have the Delaware entity fully formed in 48 hours or less. The slow part, however, is getting a U.S. bank account. If you are a foreign company coming in to set up a U.S. corporation, you need what's called an employer identification number, or EIN. Actually, every corporation needs this, so you're not being unfairly burdened by it. The problem is that if you don't have a U.S. citizen as an officer, the time to get that EIN from the federal tax authorities here, they say it's 45 days or more. I had an experience recently with a European company that submitted their application in August and did not receive it until November. If you don't have the EIN, you can't set up payroll, you can't pay your taxes, and you can't set up a US bank account. So yes, you can have the company in 48 hours, but there are a few limitations on that. The other two details to mention, that if you form it in Delaware, there is no such thing as a federal corporation in the United States. You have to choose one of the 50 states to form in. If you form in Delaware but don't have an office there, so if you form in Delaware and you plan on having an office in New York City, You then need to register your company to do business in New York City. Same as if you have an employee, a remote employee in California, or if you have a large amount of sales in, Texas, you may need to register your Delaware corporation to do business in each of those states, which comes to my original point with the exception that, yes, Delaware is the most. If you come in and say, I'm setting up an office in California, I'm only selling in California, all my employees are going to be in California, I don't plan on having any US investors or fundraising in the US, maybe you just form it in California instead of Delaware, because it saves you a few $100s a year. So that would be the exception to where you'd set it up.
Yeah, maybe to comment on the tax implications of incorporating in Delaware. As long as you don't have any business activities in Delaware, you don't have any tax obligations in Delaware. And it can be different in other states that if you incorporate there, you will always have to file state corporate income tax return in that state. So that's one of the advantages. As Nathaniel said, if you incorporate in Delaware and you have, for example, an employee in California or stock in California, you might need to register in California as well. But if that employee leaves or you no longer have stock in California, you can just close the state and you would no longer have any filing obligations. So that makes it a little bit more flexible than incorporating in a state where just because of the incorporation, you still have filing obligations in that state. And one common misconception, I see that the question came in about Nevada. Nevada, they don't have corporate income tax. So that's why sometimes you read it might be a reason to set up in Nevada, but corporate income taxation, it will also always follow where you actually do business. So, and that's also where you will pay your taxes. So it's not because you incorporate in Nevada that you never have to pay state corporate income tax. It will depend on where you do business. And then that's why also it's one of the reasons to set up in Delaware, because you can close states and no longer have to file in those states. Maybe the quickest setup, I want to make a comment about the business model there. So what we see is there are two main business models. Either the US entity acts as an agent of the Belgian company. So it's just a commercial office, but still the Belgian companies sells directly to US customers. So the US entity would only have one customer, which is the Belgian company. It sends one invoice every year, so it pays a little taxes. So that's the easiest way in terms of setup, but it has become a little bit less attractive lately, because if the Belgian company sells a lot to US customers, they might have to collect taxes on those sales. And I think we'll get back to that on sales tax and the implications that it could have. The other alternative is that the US entity works as a distributor for the Belgian company, so that it's the US entity who purchases goods from the Belgian company and then resells to US customer. That usually protects the Belgian company from filing tax returns in the US. But it might be a bit more complex in terms of setup and determining the right intercompany pricing for that happen between US and Belgium.
Mm-hmm. Maybe just another question that came in after the Nevada one. Is it possible to move later on to other states like California, San Francisco, but start in Delaware or Las Vegas and then later on expand your business? But I do believe, Nathaniel, you've touched. You've mentioned that already. Yeah.
You have there's two. You always have to have your corporation have a home in states. Delaware is nice because it's the most popular, and one of the reasons it's popular is because the cost is low. Depending on how you set up your shares at the corporation, so the number of shares, the classes of shares, the cost to keep the company in Delaware is only a few $100s per year. And then you add on a couple $100s for the post office box, and then that registered agent who's checking to see if you have mail in your post office box. And that's it. You potentially don't have any taxes in Delaware. It is, and then as we were mentioning, as Ben and I both mentioned, you can then just move where you're registered to do business and leave the home in Delaware. If for some reason there's a very strong reason to pick up and move so that the home is no longer in Delaware, it needs to move to New York or California, it is possible to do that. Depending on which states you need to change between, you either need to form a new company, take all the assets from the old one, combine it into the new one, and close the old one. There's other mechanisms to do it. It isn't necessarily the easiest thing to do, but it is possible. And that's an option if, for example, an investor offers you money but says, I'm only going to give you the money if you move the company to New York. But usually an investor is going to be quite happy with Delaware. It's the most widely recognized and most popular place to form.
Yeah, I agree. And I think most of the companies we assist, they incorporate in Delaware. Nathaniel, it's nothing against you, but I think most lawyers, they know the rules in their home states and in Delaware. And so that's why, I think it's so popular, because everyone knows how it works and it goes very fast to incorporate in Delaware.
Maybe just the other question that came in the chat, anything you want to add about it? Where is it best to start if you go directly on the stock exchange with the US patent? Maybe very shortly, because we do have a lot of other questions to address. I don't know if there's anything you would like to say about this question at this moment.
Sure. And I think that actually goes to the next question on the next slide too. Most companies that are on the US stock exchange are actually Delaware corporations.
The question, this one, let me show you. So is Delaware still the best place to start a tech company?
And I would say on that, yes, because for all the reasons we mentioned earlier, that it's very easy to form in Delaware. But then the other reason is that an investor in the United States knows what a Delaware corporation is. They know what the rules are. Exactly what Ben was touching on before. Everyone knows their local rules where they're based, and Delaware.
If they see a company incorporated, I don't know, in Nevada or Wyoming, they might ask questions why that was. There might be a good reason for it, but they might ask, why did you pick that state to incorporate?
Okay. But would you say in general, it's always Delaware, no matter what sector you're from, like not even tech or maybe even a food business, like it could be any type of business?
I would say Delaware is always safe. The most common places to form outside of Delaware would either be New York, California, or Massachusetts. In my experience, each of them are either slower, more expensive, require more public information. But again, if you're going to be based if you're going to be a biotech company, you're going to be based in Boston. Most of your sales are going to be in Boston. You're not going to do any fundraising in the United States. Maybe just do a Massachusetts corporation instead, and go with that.
Okay. Let's move on to the next question. We want to start selling on Amazon in the US and already have a US entity. At the sales side, it seems quite complicated in terms of, one, the income tax, the federal and the state in which you sell, and two, the sales tax per state in which you sell. Are there any tips and tricks on how to handle these with a minimal amount of effort? Ben, I feel that is definitely a question for you.
Yeah, and those are good questions. So indeed, there are two levels of taxation in the US. You have the federal level and the state level. And what we typically see, what makes it complex on the federal level, is how do you determine what the intercompany pricing is, and how should that work in terms of intercompany transaction, the pricing. So how we usually approach it for companies that just start in the US, we prepare a benchmarking report, not a full report, because otherwise it can get very expensive with transfer pricing reports, where we make a comparison between companies that perform the same functions to see what the level of profitability of the US company would have to be. So that's how we determine the appropriate pricing for intercompany transaction. and how that those transactions should work. The other complexity is indeed on the state level to determine in what states am I required to file corporate income tax returns, and in what states am I required to collect sales tax from US customers based in those states. So that comes all down to the term nexus. So when do you create a taxable presence in a state? It can either be because you have a physical presence like stock, employees, an office. Once you have that, you will be required to register and file that state. The other aspect is economic presence. That's fairly recent. I think those rules exist only since 2 years, and it was coming from the e-commerce business, where they try to put more and more obligations on the seller to collect and remit the tax to the state. So sales tax, maybe to start there, what is sales tax? It only applies to the end consumer. So if you sell to a company that will resell your products, your transaction is exempt, and you can get documentation from your customer to say that on your transaction you don't need to collect any sales tax. So that's one aspect. To determine B2B or B2C, it's not really relevant here. It's more, are you selling to end consumers, and what are you that subject to sales tax or not? So to summarize, I think the first step is to determine, am I required to register and file in a state? And after that, is what I'm selling, is it subject to sales tax or not? Because most products, they are subject to sales tax, but services are generally exempt. So it's usually only on the product part that you will sales tax. For Amazon, it's also pretty specific, because with the e-commerce, they try to put more and more obligations on the seller to collect the tax, but they also put rules for marketplaces like Amazon in place, because they realize that for individual sellers on Amazon, it can be pretty complex in terms of administration to register in all the states and collect the tax and file returns. So that's why they actually put also obligations on Amazon to actually collect the tax for you. So if you're selling on Amazon, it might be that for the states where you are taxable, that it's actually Amazon who is the responsible party and they collect the tax for you. So my recommendation there would be to check in the Amazon settings. There's a tax settings. If Amazon is the responsible party for collecting the tax, or if it's the individual seller that has to collect the tax. So that's one of the things that I usually recommend if you sell on marketplaces, Amazon, eBay, to check what the tax settings are and who the responsible party is for collecting the sales tax.
Mm-hmm. Okay. Staying in that same circle of taxes, when selling online, where do taxes have to be paid for individuals and companies? And I think that also touches base with one of the questions that came in the chat, like how exactly deal with tax being paid by a US customer, and is it declared as sales tax in Belgium? Like what, where does what have to be declared?
Yeah, so you can only collect sales tax if you're registered in a state, and it's based on the shipping address, not the billing address. So if you ship to a customer in Massachusetts and you're required to collect the tax, it will be Massachusetts sales tax that applies there. If you're selling to a company, as I explained, sales tax, it only applies to end consumers. If you sell to a company that will later on resell your products, your transaction should be exempt, and you wouldn't have to collect any tax on that transaction. But it's important to have the right documentation available to document the exemptions.
Ben. Next question. What about VAT, sales tax to our products? Do we pay VAT in Belgium or in the US? And if I place my product on Amazon, do I have to request a local VAT number? Again, Ben, I'm sorry, Nathaniel, I'm skipping you for this part.
So it should be exempt from VAT in Belgium, but you might have to collect sales tax in the US, depending again, do you have a physical presence in the US or do you reach a certain amount of sales in the States? So, and that threshold, it's generally 100,000 in sales on a yearly basis or 200 transactions. So for e-commerce, if you have a lot of transactions, you can reach the 200 transaction threshold fairly quickly. And then it's in terms of materiality to see, yeah, is it worth registering and doing all the administration? Because of course, there's also a cost and time related to that. So the local VAT number, that's here a state sales and use tax ID that is called. So if you have a presence in the US, either economic or physical, you might have to request that number and you will only be able to collect the tax once you have that number. And again, for Amazon, those marketplaces, it's pretty specific because I think for almost all states now, if you sell on Amazon US, it will be Amazon that's the responsible party to collect the tax, and it makes it actually easier for the individual companies selling on Amazon.
Okay, thank you, Ben. Next up, we make and sell a video game. Next year, the game will be released in English and we will focus on the US market. Do we need to pay international taxes if we sell our game via mobile app stores? We sell our game via our own website. Can we easily sell our game at trade shows? And is this with or without sales tax?
Yeah. Maybe to start with the last question about trade shows. It depends on the state, because some states that they say, for example, Florida, they say if you participate at a trade show in our state, you have to register and collect the tax. Illinois and New York, they have a safe harbor saying that if you don't do a certain amount of trade shows and don't make a certain amount of sales at those trade shows, you're protected and not required to register for sales tax purposes. So it depends a little what states you're going to trade shows to determine if you require to register and collect tax in that state.
And Nathaniel, I don't know if you want to add anything about selling on trade shows. Like, is that legally okay?
The short answer is yes. The bigger complication, as Ben mentioned, is do you have to collect the sales tax? But from a legal standpoint, as long as you're okay with the inherent liability that comes with selling anything in the United States, the liability would still attach even if you're selling at a trade show versus selling online or through a brick and mortar store.
Okay. Ben, anything about the mobile app stores or still
Yeah.
selling? Like, okay.
Yeah. So if you sell through an app store like Apple, they are actually distributing your product and they are collecting the tax for you. So that's again about sales tax. If you sell it on your own website, it can be a different story. If you don't have a presence in the US, you again have to look at the sales by state to see if you're required to collect the tax, and then you might have to collect sales tax on those sales. But in terms of corporate income tax, if you don't have any presence in the US, you should be protected by the tax treaty, and there shouldn't be any corporate income tax to pay in the US.
Okay, perfect. Thank you. Then maybe a final, I think this is one of the final questions about the accounting and tax. Like, can we sell in the US? Can we sell online in the US and keep the full administration when it comes to your accounting and your taxes in Belgium?
Yes. What we usually say, if you can do it and you have the knowledge to do it, please do the accounting for the US entity also in Belgium. We have a lot, I think more than 50% of our Belgian clients, they do it themselves or by the Belgian accountant that also does it for the US, because there are no specific standards for the accounting. We always do a review at the end of the year to make sure that everything is included correctly to prepare the tax return, but there's also no requirement to publish annual accounts. So the only obligation you have is to file your tax returns.
Mm-hmm. Okay. Maybe a question came in about the $100,000 that you mentioned.
Yes.
Do I understand well, if you exceed $100,000 online direct sales in the US, you have to arrange tax in the US? If you have, for example, $50,000 direct sales plus $100,000 via Amazon, you don't have to arrange anything. Is
So
that correct?
the 100,000 thresholds, it's determined by state. So it's not that you make 100K in sales to US customer that you will be required to collect it. It's only if you sell more than 100,000, for example, to customers in Illinois, that you might be required to register in Illinois. So it's based on the state level and not on all your US sales in the US. When it comes to how do you determine the 100,000 threshold and what is included and what not, some states, they say you have to take all your sales together. Other, they say you can exclude the sales that you make through marketplaces like Amazon because you are not responsible to collect the tax. So again, I know it's a stupid answer, but you have to look state by state to see how you have to determine the.
Mm-hmm. Okay, good. Next question. Do we need to open a US account or a PO box? Maybe Nathaniel, to have you speak a little bit. Maybe you can start.
Sure. So if you want a US entity, whether it's a corporation or an LLC, you need to have at minimum a post office box. And there are dozens, if not hundreds of providers in the United States that offer that as a function. If you don't have a US office or a US employee with the home office, then that's the minimum. If you get the PO box, you also then need to have that registered agent, who's the person that checks the mailbox for tax information or lawsuits or any other government documents that come in. If you do have a US employee, if you do have a US office, you don't need to get that separate post office box and registered agent. You can just have everything go to your US office, with the exception that if you're not there frequently, you may still want the registered agent, just because if a tax notice comes in and you don't want it to necessarily sit for 2 weeks, I'm sure Ben would agree that the faster that you can act on these things, the better. So the registered agent usually sends things same day.
Yeah, maybe just a quick comment from my side about the US account. Most companies, they will pay to a foreign company, but there are other US companies that, yeah, they just want to pay to a US bank account. So we had some issues with that before. Or that, for example, the Belgian company, they receive a check in Belgium and they don't know what to do with it. So it might make your life a little bit easier also in terms of tax payments to have a US account.
Okay, perfect. Next up, what are the legal benefits of selling Belgian products on Amazon US? What are the possible legal concerns, on the other hand? Nathaniel.
So as Ben mentioned, the benefit can be on the tax collection side. The legal concern on Amazon is the same as any sales in the United States, and that is liability. So if you send something that is broken, that injures someone, or otherwise, that any impact or any risk associated with that is still on you, the company selling. Amazon is not going to help you. The other thing to consider, if you are selling on Amazon, is that if you have a brand, or especially if you have either patented technology or if you have a registered trademark in the United States, the benefit with Amazon is that if you have a knockoff competitor or someone else that looks very similar to what you're doing, Amazon has a very robust takedown system in the United States, so that if you can prove that they're using my brand, here's my registered trademark, or they're using my technology, here's my patent, or something along those lines, you can send it to Amazon, and Amazon will tend to side with you, the seller, who has the government document saying that they have a registered trademark or a patent. And that can be a benefit to increase your sales and stop some of your US competitors.
Maybe to go a little bit further, because I don't think a lot of questions were asked about trademarks. Do you think it's very important if you're selling as a foreign entity, well, as a foreign manufacturer in the US, to trademark your products?
I tend to say yes on that, because again, a lot of this goes to the state level. The trademarks in the United States are federal, thankfully. So that's not something you necessarily you don't have to register your trademark in all 50 states. If you do not seek trademark protection at the federal level, you're limited to gaining whatever state protections you get in places that you've sold the goods. So if you're only selling goods on the East Coast of the United States and someone shows up on the West Coast of the United States using your exact brand and you don't have a federal trademark, there's very limited things you can do to stop them, unless you have managed to start selling on the other side of the country. If you have that federal registered trademark, then you have the ability to stop them anywhere in the United States. You don't have to worry about where you've sold and where you have a presence, where you've been marketing. And also, trademarks are easy to obtain. They're relatively inexpensive. It's not anything nearly as complicated as a patent or some of the other intellectual property protection.
Okay, thank you, Nathaniel. Following up on that, I mean, you've touched base on it a couple of times about potential lawsuits. So a couple of questions came in concerning that topic. How should we handle product claims? Are there specific insurances to avoid litigation? And how can we protect ourselves against potential lawsuit? And I think this is definitely something on the minds of a lot of Belgian companies, because maybe we're not as used to it as US companies are.
Okay. Yes. So three things to think about on this. One is, as I mentioned at the beginning, if you have a U.S. entity, that can serve as a shield for your assets or your parent company in Belgium. If there's a problem in the United States and the sale is through your U.S. entity, then it's possible that you can limit your risk and limit your losses to that U.S. entity. Not always, but at least it adds a little bit of protection. If you do have a U.S. presence with the U.S. entity, be very careful and look at your insurance policy. I know that you can get a global policy that covers the United States, but you may want to consider looking at a separate U.S. insurance policy, either as a general liability or some of the other more specialized forms of insurance that we have in the United States, such as officers insurance. And then finally, this won't help you necessarily with Amazon, but if you're selling direct with customers in the US and you have a sales contract, there's three things you can do to help yourself. One is that you can limit your liability. So you can say that only things on this list are my problem, or things on this list are my problem up to a certain dollar amount, so that there's a limit in terms of what your exposure is. You can add in an opportunity to fix it. So if you notify me that something is wrong, I have 2 weeks to fix it before you can file a lawsuit against me. Both of those provisions are very common in the United States. And if you have a direct contract with your customer, you can add that in. And then the other thing to think about is where the dispute would happen. I was on I gave an example the other day that if you're selling into Maine, which is the most northeast state in the United States, Maine does not have an international airport. The closest international airport that you can do to get to is Boston in Massachusetts, and it could be a 2 or 3 hour drive to Maine. So if you want to have a dispute, you can put in your sales contract that you want any dispute to be in Boston, which makes your life easier. And frankly, that can help because the court system in Boston moves much faster than it does in much more rural, quieter, prettier Maine.
Yes, absolutely. Sorry, I was trying to unmute myself and I was too late. Okay, thank you very much, Nathaniel. Next up, we have a web shop in Belgium and accept orders from the US. We mainly sell our products DDO, so delivery duty unpaid, and door to door. Which legal and tax matters do we have to consider in order to comply with Belgian and US law? Maybe Ben, you can start off with that one on the tax side.
Yeah. So on the federal level, you should be protected by the treaty, the tax treaty between Belgium and the US. So there shouldn't be any corporate income tax implications. The exposure might more be on the state sales tax side. If you exceed a certain amount of sales, you might be required to collect tax on those sales through the web shop in Belgium.
Okay. Nathaniel, for the legal,
yeah. On the legal side, depending on what the goods are, you may have either import issues or other regulatory issues. From a regulatory standpoint, certain things in the United States require certification or application in order to start the sales, such as food or alcohol or pharmaceuticals or other sorts of medical devices. So that's something to be aware of. And then again, it goes back to even though you're selling from your web shop in Belgium, if you don't have that US entity, if there's a problem, you're going to find yourself receiving a lawsuit in the United States, and it's going to be in a US court. So that's just something to think about in doing your direct sales from Belgium.
Mm-hmm. Yeah, for sure. And that is also definitely something that if you were to have some questions about the compliance on a federal or state level, that Finance Investment and Trade can help you with as well, depending on the products that you're looking to import. So feel free for this also to reach out to us directly afterwards. We currently sell in the US through our Belgian web shop. Again, another company doing this. What risks are involved? It might be the same as what you mentioned earlier. Is there anything else both of you are thinking of that they really should keep in mind?
No,
Okay.
on the import side, be careful on the import regulations and all the tariffs and duties, and same goes with just remembering the liability aspects. And I'm sure Ben will echo his earlier comments in terms of the taxes.
Indeed.
Yeah. Okay. Then next, we use a third-party logistics warehouse in the US to serve our existing clients as well as Amazon. What are the main tax implications of that, and what do we need to be aware of?
Yeah. So I'll break it down for the federal tax implication and the state tax implications. If you use a 3PL and you have inventory in the US, it can suggest that you have a fixed establishment and that all income related to those activities would be subject to corporate income tax in the US. But it is specifically protected by the treaty between Belgium and the US that if you only have inventory in the US to serve US customers, you are not subject to corporate income tax in the US. So what we usually recommend there is to file a federal protective return to formally claim the benefits of the treaty and say, I don't have a fixed establishment in the US and I'm protected by the treaty. So you file the return, but there are no numbers reported. So it's just to protect yourself because there are certain advantages related to filing such a protective return. On the state level, the states are not part of the tax treaties. It's only the federal government that's part of the tax treaties. So the states have their own rules to determine if you're subject to tax in that state. And usually if you have inventory in a state, you will be subject both to corporate income tax as well as required to collect sales tax as for all the sales that you make in that state. So the exposure is more on the state level, where you might be required to file a corporate income tax return. And there might also be an actual corporate income tax to pay, because certain states like California, they have an $800 minimum tax regardless of if you have a profit or not to report. And then again, on the sales tax, if you have inventory in California and you ship to customers in California, you will be required to collect the tax, unless, for example, like Amazon, if you sell on a marketplace and they're the responsible party to collect the tax.
Okay.
Yeah, so those were all comments from a tax perspective. So it should be possible to do it from Belgium, but it might be recommended in this situation to also set up a US entity, also for the legal implications. I think, Nathaniel, you might have another view on that it might be recommended, at least from a legal perspective, to set up a US company if you have inventory in the US.
It definitely can help. As I mentioned earlier, the setting up a US entity isn't difficult. It doesn't have to be terribly expensive, especially if the US entity is a wholly owned subsidiary of the Belgian company. And if it simplifies either your contracts in the US or how you do your tax reporting in the US, it may be worth it. And it's something to talk about with your US and Belgian tax experts.
Okay, thank you both of you for this answer. Is it more interesting to distribute through a fulfillment center or fulfillment centers to be taxed less? Like, is there a relation between being taxed less and working with fulfillment centers?
I think if you have a fulfillment center in the US, the benefit is that you will be able to serve your US customers faster. So that's the benefit for me. Will you be taxed less? I think it's the opposite. You might be required to file tax returns if you have inventory in the US that you might not have to do if you don't have inventory in the US.
Okay, well, are there any legal implications when it comes to those fulfillment centers, Nathaniel?
Not really. It's as Ben mentioned, that if you don't have if your fulfillment centers in Kentucky, for example, which is a very large place for Amazon, and you don't have sales in Kentucky, you might have just added Kentucky onto your list of states that you owe taxes in.
Yeah, something to think about.
Yeah. Maybe just a quick comment in terms of differences between the tax rates. So the tax rate on the if you're taxable in the US, for example, you have a US entity, the federal tax rate is 21%, but you have to add state taxes as well, which is 5 to 10%. So on average, it's between 25 to 28% of taxes that you pay in the US. At this moment, because there's apparently a proposal that the corporate income tax rates would be increased to 28% under the new president.
Oh, interesting. Then, if we ship, these are the two final questions actually that were asked and are maybe a little bit more specific and not 100% to your domains. But if we ship from Belgium or Germany to the US, who covers the custom duties?
On this one, so I wanted to mention that the duty owed varies by both country and by product. And generally, in the US, if you're shipping directly, the person who pays the duties is the importer of record, which might be the US customer. And there are instances, and the US government at Customs and Border Protection on their website have a decent explanation about this, that it is possible that if duties are owed, that the package that you've shipped from Europe will sit at the local post office for the person to pay the duties before they can actually get the goods. So they have to go pick it up from the post office and pay any duties that are owed, which are assessed when it comes across the border by Customs and Border Protection. If you're using a courier or a delivery service, it's possible that this is all factored in. So UPS or FedEx might be able to help you in this regard, that they have a freight forwarder who can assist, and it's built into the cost. But those are issues to think about. It's very specific in terms of how you're shipping it, who's carrying it across the border, what the goods are, where it's coming from, where it's going to. And I'd look on the Customs and Border Protection website to see if they have any information specific to what you're trying to do.
Mm-hmm. Thank you, Nathaniel. Then finally for today, what taxes are there on alcohol?
So there are two main types of taxes on alcohol. You have excise taxes on alcohol, which is based on the quantity and is paid by the producer, so it's factored into the cost. And then if you're selling, you might have to collect sales tax on the products that you're selling. So that's based on the state level.
Mm-hmm.
And then,
sorry, Nathaniel, yeah, go ahead.
Well, I wanted to add this is actually a very complicated part of the import and regulatory environment in the United States, which is unfortunate because Belgium has so many wonderful alcohol-based products to share with us here in the United States. But you can look on the TTB, the Alcohol and Tobacco Tax and Trade Bureau website on this. You need, in order to send things to the United States, you need an import permit, which the importer would register, and the importer registers with the federal government in order to be able to receive things in the United States. That importer is the one who is probably going to be paying the excise taxes and some of the fees. The other thing to worry about is that you need to get approval for your labels and your goods at the federal level, and sometimes also at the state level. So just be careful before you start shipping alcohol-based products directly into the United States.
Mm-hmm. Yeah, definitely. Alcohol is something that is very regulated in the United States. Again, if any one of you would have more specific questions, that is also something from the New York office that we help companies with when it comes to beer or wine, or we've been seeing a lot of gin companies too lately from Belgium. So yeah. So those were the official questions that came in prior to registering. Maybe an interesting one that came in earlier, but I decided to keep it all the way to the end because we just had that discussion about setting up a U.S. entity. Should we set up an S corporation, a C corporation, or an LLC? So if they do decide to set up an entity, how to best decide what type of entity to set up?
Yeah, no, that's a good question. Generally, most entities that we set up are C corporations. S corporation is tough to do unless you have a U.S. citizen involved in the process.
Mm-hmm.
LLCs, LLC stands for limited liability company. They're attractive if you're a U.S. entity or a U.S. Company because they're a pass-through. So the LLC itself passes all the profits down, and those are taxed at the member level. There can be some negative consequences if you're a European company or European individual that invests directly into a U.S. LLC. So if the LLC is best, and talk with your U.S. tax advisor, talk with your U.S. attorney to try to find the best corporate structure for you. But if you decide that an LLC is best, perhaps it's going to be an umbrella corporation that has a number of other subsidiaries underneath it. And you're based in Belgium. What you can do is you can form a U.S. C Corp as a blocking entity, as a holding company to hold your assets in the LLC. So it would be the U.S. LLC, the Delaware C Corp blocking company, and then you in Belgium. That might be a good structure for you. But the short answer is it really depends on what you're doing, where you're based, who's involved, what you're trying to do in the future, in order to give a direct answer.
Yeah, I think I agree. If the US entity is 100% owned by the Belgian company, the best option is probably to set up a C corporation. If on the other hand, you have a US owner, they might want to have the LLC, so he has the benefit of the pass-through taxation. And as Nathaniel said, you can have the Belgian entity then set up a C Corp blocker, so it's not the Belgian entity that has to file corporate tax returns. But yeah, if you set up a US entity with a US owner, they might want to go for an LLC because they can then benefit from the tax related implications for an LLC. Maybe just last comment about an LLC. You can also elect corporate taxation for an LLC. So it's possible if for legal reasons you prefer an LLC, you can do it. But if it's 100% owned by a Belgian company, we usually make the corporate elections. So it's the LLC filing corporate tax returns and the Belgian company is protected.
Okay, thank you both for that answer. Another one that came in, I don't know if you have any opinion on this. Are there benefits to subcontracting the manufacturing of a product in the US instead of importing it to the US from Belgium or from anywhere?
There may be. Again, it depends on the goods. I've worked with companies that have subcontracted in the fabric industry to the United States, and it does simplify either distribution, and it can simplify the supply chain. From a legal standpoint, it's still probably going to be your product, so it doesn't necessarily help you from a liability standpoint. Ben, I don't know if there's a tax advantage to doing the subcontract manufacturing.
I think there might actually be a requirement to file tax return if you're subcontracting work in the US, because then you will create a taxable presence in the US, and there might be tax filing implications related to that. So yeah, it might be worth considering to set up a US entity if you would subcontract work to the US.
Okay, perfect. I think that was it for today. As mentioned, feel free to email Flanders Investment and Trade if you were to have any more general questions. On this slide right here, you can also see the direct email addresses of both Nathaniel and Ben. So feel free to send them an email as well if you would like some more detailed information. And besides that, I want to thank all of you for being present today. Maybe be on the lookout for some extra e-commerce webinars in the future. And I would like to thank Ben and Nathaniel, of course, for taking the time today and speak to the group. And enjoy the rest of your day.
Thank you very much.
Thank you. Have a good one.
Bye.
Bye.